Here's the futures this morning. Not bad. Got some triple-digit gains for the Dow and the NASDAQ. Joining us now, Marta Norton, Chief Investment Strategist at Empower, and you were the strategist that I was talking about earlier. With AI, welcome. With AI, we can talk about AI companies, or we can talk about AI's impact on every other type of company. So that's really all we talk about all the time. And it's a daunting future. Is there more uncertainty now because of AI than in a normal market?
Yeah, it feels like it. It feels like we're at this point of transformational change. We have this whack-a-mole market where we have software questioning its future. We have wealth management questioning, investors questioning that future, insurance brokers, truckers. It's almost like you don't know where to look next in terms of where AI disruption is coming. So yeah, I think it's a theme that I think has caught a lot of investors off guard over the course of the year so far. And
you point out on both sides of the there's some industries and companies that will go to zero. There's some that will flourish, and there's some in between that it depends on how you integrate AI into the whole equation, whether you just replace everyone with it or you augment the people that you have and what they're able to do with it.
Right. I mean, when we think about winners, losers, and survivors, my guess is, at least if we're looking at software, for example, I'm not sure we're looking at an enormous number of losers that are going completely to zero. I think we're looking at a large swath of companies that are going to coexist. And the valuation that you put on those companies is going to depend on how well they pivot, how well they coexist. So the re-rating in some ways makes them sense.
But in some of those, you think they're viable at this point. You're not so sure. Overall, AI hasn't come down enough. The hyperscalers or the leaders, you don't know if you've been putting new money there, but software is so decimated, you might find some good company or good buys there?
I mean, the software sell-off has been pretty severe, pretty indiscriminate. I think at this point, I don't know if I would buy a software ETF because I do think you do need to do some filtering. But I think at this point, it's worth sifting through the space and seeing what's left and where those valuations stand. Though I would say at this point, some of the hyperscalers are looking more attractive when you compare their valuations to, say, what they were 6 months ago. So I think the AI opportunity is both where the disruption is occurring, and then at that center of the AI trade, it's a little bit cheaper than it was.
Yeah, so we went through fourth quarter earnings season. We got retailers still coming on some different fiscal years, but overall, it was pretty good, but that wasn't enough, was it?
Yeah, it's interesting. We were all waiting for earnings season thinking this was going to be the return to fundamentals. Earnings delivered. We had double-digit earnings growth. We had strong revenue growth. But the market really hasn't gone and followed that earnings growth and soared higher. And I think it's because of these themes that are running through the market around AI disruption and the concerns of AI spending, which you all have been talking about. So I think there's still this kind of cloud that overhangs the market at the moment.
Although the Dow hit 50,000, we didn't have hats ready. It snuck up on. That was better than 10, 20, and 30,000. We had hats for all those. Santelli actually did have a.
He had a $50,000 Dow hat.
50,000. So we're not far from all-time highs, but it seems like the pace of gains.
The pace of gains has slowed, and there has been this pivot. What won in 2025 is not what's winning today. We have a secular surge. We have consumer staples on the move. So it's been this reversal from the year prior.
Probably buy weight loss drugs, companies.
Can always buy weight loss drug companies. Health companies.
Isn't AI gonna help some companies where it's just unequivocal that it will make them better?
I think that.
Is that healthcare?
I mean, healthcare. A lot of folks are talking about research and development and kind of a quicker pipeline, a quicker move to market. But I don't know if it's there yet. I don't know if we're really seeing it in the earnings or in the healthcare businesses yet.
Long conversation with someone who lost 50 pounds. They don't think about food anymore.
They don't. Told you, we're all going to be on the pill.
No, they don't think about food. They don't think about alcohol. They don't think about drink. They don't think about sex. They're just like this. I'm thin, but I've got absolutely no reason to live. Does that sound good? And they got Ozempic face on top of everything else.
What do they say? Thin tastes the best. What's the line sling about that?
Have you thought this through, though? Do you want to have no desire for anything?
I don't think that's what it is. Don't think that's what it is.
I might have to try it.
I think you're going to have to try it as a test.
Does the pill work or not?
That I don't know. I think it's supposed to.
I'm not sticking a needle in my stomach.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The tech turnaround, NASDAQ pacing for another solid day today. We'll discuss and debate when that space might stabilize. Joining me for the hour, Joe Terranova, Carrie Firestone, Liz Thomas, Jason Snipe. Let's check the markets. I'll show you what I'm talking about. The NASDAQ's up more than 1%. Haven't been able to say that all that much lately, but Joe, we are today. I'm wondering if maybe this is the start of a turn. Nvidia's up 2.5%. The IGV was up 2% last I checked. Looks a little different.
So I think every turn begins with stabilization. I think that's what happened. I think you had some stabilization yesterday in a lot of the software names. We saw some of the private software companies releasing their earnings to give some comfort. Then you have some follow through today. Excellent earnings from Cadence Design. That gives you a little bit of insight as it relates to how the AI disruption is actually affecting some of these software companies in real earnings. And it's broad. It's not just software that's powering us higher today. Obviously, industrial production, housing starts really strong. So that lent itself to some of the energy names performing well, some of the economy names. But back to technology, you still have names in the technology space that are working well. Analog Devices, Micron, Ciena, Keys, and On Semi, all 52-week highs today.
The point you're making in part by not saying it is outside the mega caps. Right?
Yeah.
You're seeing some stories develop outside the mega caps. The question is, Jason Snipe, whether 1 week from today is the whole key.
Yeah.
Especially for the mega caps, and that's NVIDIA.
Right.
Reporting its earnings 1 week from today. Barclays today with the masters of the obvious statement. NVIDIA, sorry, but it's true. I mean, NVIDIA, here's what they say. This is deep, so pay attention. NVIDIA could make or break big tech's so far mediocre season.
Wow,
Never heard it before.
You go, Barclays. You go.
So, couple things with NVIDIA. Obviously, today was the announcement of the Meta deal, $50 billion deal, multi-year deal. I think NVIDIA obviously hasn't done much over the last 6 months, only up 4%, up 2% roughly year to date, but it's bouncing today. And I think part of it is obviously this Meta deal, but I think a lot of the talk for me or kind of the digest, and I have kind of with our analysis is, there's a lot of talk early on about these TPU chips and what's going on with Gemini and other LLMs. And I think the GPU chip still is the most important beltway chip for many of the technology and innovation that is continuing to come. So clearly, like many other shareholders, I'm very much looking forward to the print. I think it will be, of course, very important for the IT space and the entire ecosystem as we've seen this current rotation
going in, right? We know it's important, obviously. Do you feel confident about it? And do you feel, as Barclays suggests, that this is the key now to turning this group around? Year to date, every stock's down except for NVIDIA, which is only up 1.5%.
You got it. No, I do feel confident coming into this print, because I think the other thing I will say that I think has been important for me to see is all the circular spending, all the CapEx that we've been talking about for months and months and months, and looking at the ROI and what that story is. And that's what obviously the market has kind of grabbed hold of. That's the narrative, right? What is the ROI story? But if I look at this and deal with OpenAI, the $100 billion deal a few months ago, they actually have pulled back that spend to $20 billion. So I think there's been prudence with their spending, and I think that's important with the whole CapEx narrative.
Carrie, Wells Fargo says buy it into the print. Cantor today says stay calm and trust in Wong, as in Jensen Wong, as we remain at the cusp of a rack-scale super cycle.
Yeah, well.
They reflect what many others say. Is it time to buy this stock into the print?
Yeah, I think it is, and we've seen people buying. The stock's up 11% in the last couple of weeks. And remember, we had $1 trillion worth of selling that came primarily out of software companies over the last few months. That is enough to buy 3/4 of all small cap stocks that are listed in this country. And all of those small caps did not go up 65%. There's a lot of money that was on the sideline. It has to go somewhere, and much of it is now coming right back into what was sold. So I think it makes sense that you start to see Microsoft move higher, Booking Holdings, that's one of the stocks we had owned, move higher across the software spectrum, and NVIDIA, which is the powerhouse, and they are powering AI. I mean, if everyone's getting disrupted because of AI and software is going down because they won't exist because of AI, which isn't true, it's NVIDIA that's selling those chips. So yes, it makes sense.
So Liz, let's see if the stock and these other names start to ramp into that print in anticipation of something good. I'm not necessarily sure the sector's going to wait around to see what they deliver, because I think everybody assumes, how could they not deliver a good quarter in guidance if the spending ramp from these other names continues to escalate the way it does?
Yeah, I don't think the sector will wait around, and I think software probably does gain into that print. Look, over the last month or so, software's been at various levels of oversold. So we're at a place where I think it's well into the bottoming process, and there's an opportunity, especially from a technical standpoint, for upside here. And we all know that NVIDIA is the bellwether for sentiment, particularly in the AI trade. If things go well, it's just further justification that this AI spending bender, the CapEx spending bender that companies are on and still surprising to the upside on, is going to continue and should continue. And I think that's what investors need right now to feel calmer. That being said, I don't think this will end up being rising tide lifts all ships and that we've got somehow, everything goes up from here for the rest of the year. I still think that the rotation that's been in place will stay in place, and we need some signals from sectors like financials for that cyclicality to really take shape again.
So, again, tech's having a pretty good day. Let's talk about Amazon, because it snapped its 9-day losing streak. We were going for 10 yesterday. We didn't want to get that, so we got 9. $450 billion in market valuation, poof, over that stretch. Berkshire Hathaway, since you guys are talking about Mr. Buffett, they slashed their stake. They also trimmed their Apple stake. Morgan Stanley reiterates Amazon today as their top pick. AWS and agentic catalysts are ahead. Jason Snipe.
Yeah, finally, right, Scott? Finally. 9 days is a long time. But I think the story is obviously, what we were talking about earlier in terms of the CapEx, $200 billion worth of CapEx. What is the ROI meaningfully? I mean, this is up 60% from last year's number. So it's obviously a big number, free cash flow declining. But, when I look to the print that we had, AWS re-acceleration, 24% return there. The expectation was 21%. So those are very positive numbers. They laid off 16,000 people again, over-hired through the pandemic. So they're kind of right-sizing the labor force, which I think is important. AI driving 22% of AWS growth. So I think they are leaning in the right ways. Time will tell how these numbers play out in terms of the CapEx and the spending, but I think that's what's been the overhang on the stock. Operation margins were also pretty good.
It's going to be one of the worse off performers today in a market that, as we said, technology's actually been doing okay. Morgan Stanley cuts the target 223. They had 245. Their guidance fell short. Jason, I'll send it over to you. Yeah. Cyber stocks have been hit pretty hard, along with the broader software sell-off. This name's down 16.5% year to date. I had a big back and forth on Closing Bell yesterday with Dan Ives, who was, defending it from here to eternity into the number. Yeah. And, here's the stock reaction. What do I do with that?
Yeah, I mean, it's significant. It's off 6%. Obviously, the stock is down 16% year to date. Hasn't traded great over the last year. It was a beat on the top and the bottom. RPO was up 23%. ARR was up 33%. I think the story for me, as it relates to a lot of the cyber stocks, and particularly Palo Alto, they just closed the acquisition of CyberArk. Chronosphere obviously is now in the camp as well. So last year was a little bit of the M&A activity. The spending that they were doing. And this year, it's kind of the AI story and cannibalizing software names. And I think what the CEO did very well in explaining, AI is going to serve as a catalyst for these names. As you look at the the difficulty and the terrible cyber attacks that firms are going to be potentially dealing with in the future, you're going to need a player like Palo Alto and many of the others as well. CrowdStrike, Zscaler, there's a lot of great names in the space. So I completely agree with the CEO here in saying that AI is going to serve as a catalyst for a lot of these names. And I think the market is kind of misunderstanding what's going on here.
This cyber sell-off more broadly overdone?
I'm not sure about that. And I think sometimes there's a dislocation between what the fundamental story is, which can be perceived to be excellent. In reality, it might be excellent. And then measuring where people are in terms of sentiment and positioning. I don't know. I haven't heard anyone really come on the network universally and say, we want to sell cybersecurity. It seems as though it has the enduring theme.
I hear
as
the
it
exact
relates to
opposite from
software.
everybody, including everybody on this desk.
That's where I'm going with it. So if you think about the factor of sentiment and positioning, take a look at Palo Alto. The stock currently trades $154. The 12-month price target is 210. 77% of the analyst community still have a buy rating on it. So I just think there's this degree of bullishness that exists both in sentiment and positioning. And unfortunately, people are staying anchored to that when price is actually telling a much different story.
What about cadence? You mentioned it earlier. We haven't hit it. Let's take a look at that one. Because they beat, and the stock was performing well, as it still is, up 9%. Rosenblatt upgrades it to a buy. 360 is the number they take it to. Morgan Stanley comes down a little bit on their target to 370. So it was 385. So they just temper their enthusiasm just slightly. B of A reiterates it, a buy today, protected against AI disruption. Is that the biggest takeaway of all?
It is.
What they say, the narrative, protected against AI disruption? Because that is what we're trying as an investor class to figure out. Who has some level of immunity to being disintermediated to a large degree?
I also think it's about, can AI be additive to your business model? In the case of Cadence, in fact, it is. I think they spoke eloquently with confidence about an environment in which that, in fact, can ultimately happen. If you think of the complexity as it relates to software and the production of semiconductor chips and the relationship there, the disruption element is probably not as strong as it is in other areas like an Adobe or potentially a Salesforce. So it was an excellent quarter. EPS came in 199 versus 191. Revenue came in 1.44 billion. The guidance was higher, but I think it was the elegance of the conference call and the way they spoke about the environment and how disruption really, yes, could happen, but also look at how it could be additive.
All right, so a big earnings mover is Cadence. Here's a question for you, Liz. Are we appreciating enough how good earnings season has been? Tony Pescarello of Goldman has a note out today, talks about profit margins hitting all-time highs. While obscured, he says, by, quote, iffy price action and a ton of local noise, the Q4 reporting period has been very impressive. At its highest level, a fifth consecutive quarter of double-digit earnings growth is set to be recorded. To my eye, what stood out the most was an upward shift in S&P corporate profit margins, which rose to a fresh all-time high. Yes, it's backward-looking, and the stock market is busy processing what the future may or may not look like. I'd argue that margin expansion is an important signpost for equities over the longer horizon. I think it's a good note to jump off and talk about how strong earnings season has been.
Yes, and even to follow up on some of the software stuff, revisions for software are up 10% since fall, yet the prices are getting hit. So that's another mismatch between what the fundamental expectations are and what's going on in the market itself. But broadly, as investors, are we underappreciating how good earnings have been? Absolutely, we are. And double-digit earnings growth, not to mention revenue growth at 9%. And then if you look ahead, calendar year 2026, the expectation is 14% earnings growth and revenue of 7.5%. So I think that if the market can get its arms around the idea that earnings have continued to stay stable, as profit margins are rising, you rarely see the stock market really stay in correction or even bear market territory. So with profit margins expanding the way they are, expected still to be led by technology and then by materials, which is doing well this year, I think the cyclical story remains intact. I think the technology story remains intact, but maybe isn't as much of a shining star return-wise as it has been.
Makes sense. Then why, Joe, according to Bank of America's equity client flow trends, do you have near record outflows in this stock market? Net sellers of U.S. equities last week, near historic single stock outflows, the third highest in their data's history, which goes back to 2008, so it's not forever, but it's 2008 is what it is. Clients sold stocks in 9 of 11 sectors, led by financials, 6th consecutive week of outflows. Staples, 2nd largest ever. Industrials, tech, discretionary also saw large outflows. Earnings are so good. Liz paints a picture that many would totally agree with.
Yes.
Why are people selling stocks?
And in fact, if profit margins are strong, it helps the narrative surrounding tariffs not being inflationary, because those corporations are going to absorb the cost of the tariff in the actual profit margin. I'm surprised by that report, quite candidly. I think I would say the selling that I've witnessed is more institutional in its nature. We spoke yesterday.
They are talking about institutionals. It's B of A's clients. I mean, they're talking about
their clients.
They're talking about institutional flows, not retail.
Yeah, okay, because let's make that clear. Because yesterday,
I just made it clear.
We talked yesterday about the fact that retail was actually buying.
That's true. Right. That's why I said retail.
I think that you're seeing more institutional engagement on a faster. Well, B of A has retail clients as well.
I know, but I think we know what we're talking about. So carry on, please.
No, we don't.
Let's go.
Anyway, the institutional holding, as I said yesterday, is becoming smaller and smaller. The volatility in the market this year on an individual basis is far more extreme than it's been the last couple of years. So I think that's something that can remain a constant theme for 2026, where you see a lot of these reports where institutions are selling and retail is buying the dip.
That's why we'll make the distinction. Nicely done. All right. Speaking of buying and selling, we are going to take a break. All right, we have a lot of moves, to get to. I want to start with one from Bryn Talkington, who joins us now. So we have talked, nice to see you, repeatedly about from sector to sector to sector to sector that these AI fears have, taken down. Real estate, brokers, et cetera, are caught up in that to some degree. You bought CBRE, which Josh Brown did the same in the midst of all of that upset. Real estate hit a 52-week high today. Tell me more about this name and why for you.
Trade for last week, so dumb. And these single stock moves are so extreme. And we see what's happening. The CTAs are coming in, shorting these names. It's so ridiculous. And what's ironic is CBRE had earnings last week, and they crushed it. It's like all-time earnings. They were pretty aggressive on their earnings for 2026, up mid-teens. And actually, the CEO talked about, Scott, how great they are already getting about 25% cost savings from research from AI. And over the next 2 years, their professionals are going to be able to do things they never could have done before, all because of AI. And so if you think about a company that's just embedded in the economy, this is the exact type of company that will benefit from being able to get research so much faster, so much cheaper. So I just took the opportunity to go against the algorithmic traders who should not have shorted the stock. And I just think this is a good example for investors. Listen to these earnings reports, because there's a lot of opportunity to be found when these CTAs short these stocks for really dumb reasons.
Are you looking at other things that you deem to be down for quote unquote dumb reasons in this whole software upset?
I mean, I've talked about Blue Owl's OTF many times. I think that also makes no sense. You're issuing debt to billion-dollar revenue, 300 EBITDA per year companies, and you're not looking at the terminal value. These companies don't need to go public. And so I just think I like the debt side on the software side. I think, ServiceNow, we're seeing obviously all of those insiders buying their shares. I think software as those companies are more complicated. But to me, I think the OTFs, the CBREs, just continue to take advantage and be on the other side of those CTAs when they're shorting these single stock names, because it does get just so extreme and they're very overdone.
Let me ask you real quick before I let you go, since you're an NVIDIA shareholder, and we discussed as our lead today whether, in fact, this report 1 week from today just holds the key to this market right now, especially what's been a very fragile tech space.
I don't think it does. I mean, Jensen has been out and about. He's, so talkative. You had him on your show, just 2 weeks ago. So I think we know what he's going to say. I think the market right now has just moved on to the memory space, and that's where you're seeing this big energy and these big flow of funds. I mean, ultimately what we know, Scott, is NVIDIA gets cheaper and cheaper every quarter because they continue to just be at the epicenter, but the market right now does not want this stock to give over 200. I don't think this earnings report is going to get it there.
I don't know. I mean, yes, we know what he's going to say, and we likely know what he's going to guide to, but sometimes we just need our security blanket. I mean, you know, we get a little upset every now and again. We need the market security blanket, and in some respects, maybe he and it, being NVIDIA, are just that. Bryn, thank you. Appreciate you coming on. We'll see you soon. Bryn Talkington. Let's, Carrie, get to your moves, because you have several. Let's start with American Express. Why did you trim some of that?
It was a big position. We've owned it for years. The stock has gone from 11 times earnings where we bought it, bought the large position, to 19 times now. And we just decided to move some of that into other names, that's all.
Okay, you bought more S&P Global. Is that one of the names?
Similar.
You take some of the profits, you buy some more of that?
Yes, exactly. I mean, S&P down 25% with this wave of hitting software companies. And this can't be totally disruptive. They are the rating giant, particularly in fixed income, and that's where we're having a lot of debt selling right now. So their business is good and will improve, and we thought it was really an attractive price here.
Same as like theory behind what Bryn did.
Yeah, exactly.
Right? I mean, you look at
opportunities.
Okay.
Well, you feel good about Moody's today because Moody's reported, and they confirmed exactly what you're talking about.
Exactly, right.
So you bought American Waterworks. That's a new position?
Yes, it's new, but it's a name we've owned in the past.
Okay.
And it's a utility. It's a water utility. It went as high as 40 times earnings on the wave of sustainability. And as a water utility, it's the largest publicly traded water utility, and they've been expanding. And we believe that they can grow their earnings 11% roughly per year. They have 2.5% dividend yield, and the stocks come down. So we thought it was an attractive entry again.
A new name for you, and I think for the show, for that matter, Flowserve?
Yes.
New buy.
Yeah, so
record high today, by the way,
exactly.
as you look at the chart.
Exactly. Well, we think there's a lot more opportunity. They're in the business of pumps, valves, and seals. They're an engineering company aftermarket. They provide to the chemical industry, oil and gas, power generation. I think it fits with the whole theme of moving outside of just technology, although they serve tech businesses. And in fact, while it's up high, it sells for under a market multiple.
Okay. After the recent results, they bumped the target by $10 more, $299 from $289.
Yeah, no, I continue to like this stock. Obviously, it's roughly flat this year, up around 15 over the last year. Skyrizi and Rinvo continue to be the stalwarts in terms of outpacing the growth from Humira, and I think they got some stuff cooking in terms of their pipeline. So I continue to like the stock and stay long here.
They also make a call, Joe Piper does, on Amgen. They bumped the target to 432 from 381. Let's look at the chart.
378 right now. Last couple of days, I think it went to a new all-time high, right, Carrie?
Yep.
So this is one of the leaders. We've had a little bit of a rotation in the biotech trade. At the end of last year, it was about small caps. It was the XBI. Now it is about large cap biotech. And Amgen gets you directly the exposure you need in that regard.
You loved this trade, speaking of the broader biotech trade, and then if I recall, within the last, I don't know, handful of weeks, you sold out of the IBB, right?
No, it didn't sell out.
The XBI?
Didn't sell out of the XBI completely. I did cut the position after a series of incremental buys over the course of the last several months.
Thank you for correcting me on that.
Absolutely.
Ulta, which made your day. Look at a big smile on his face. Look at him, ladies and gentlemen.
I'm your security blanket.
Let's get a shot of him. Look at that. Look at that. Ear to ear. Look at those pearly whites. All right. Ulta. Oppie, top ideas list, record high today. You take that one too.
Can that be disrupted? I don't think so. By AI, I have a 17-year-old daughter. I know what's going on in this country right now. The younger generation is focused on beauty in a way that none of us ever were. It's playing to the bottom line.
Speak for yourself.
Definitely speak for yourself there, pal.
It's playing, I walked right into that one. It's playing to the bottom line. I gave this as a final trade yesterday. And on a valuation basis, you're not talking about an unreasonable PE for this company.
Okay. Costco gets off of Oppie's top idea list, Jason Snipe.
Yeah, listen, Costco had a rough year last year in terms of trading. Is down around 4% over the last year, but it's up 16% this year. As I think it kind of runs into a little bit of what's been going on with the staples trade, which has been very solid. So they've managed inflationary costs. I love the runway with the membership business. So I continue to like this one long term.
All right, welcome back. We'd love to bring you all some notes that drop either during the show, maybe right before the show. We got one today from Jonathan Krinsky I thought was pretty interesting. And why maybe it is hard, as Liz was pointing out, some of the, all the good things happening, behind the scenes, that it's hard to get really negative on this market when, as Jonathan points out, consumer-facing groups are remaining resilient. Discretionary nearing a breakout, he suggests. Restaurants continuing to work higher, casinos breaking a multi-month downtrend, and airlines taking flight as well. He's going to join me on 3 o'clock on the closing bell today to suss this out a little bit more, but it's interesting. What do you make of that?
Pulte Group, Darden Restaurants,
Yeah.
Williams Sonoma, Ulta Beauty, Royal Caribbean, Young China, our top holdings, consumer discretionary, all up 15% or more for the year.
What do you think?
Consumer confidence has taken a hit over recent months, and I think it probably does bounce soon, especially if labor data kind of stabilizes out here, and discretionary stocks could really benefit from that.
Yeah, he says, I mean, as long as we're saying, as long as these groups sort of remain in this mode, it's difficult to get too bearish on the medium term. That again, Jonathan Krinsky, BTIG, joins me 3 o'clock closing bell, along with Tom Lee, Cameron Dawson, Stephanie Link. So we got a lot to kick around. Jason Snipe, give me a final trade.
Like Chevron here, they're committed to shareholder value, dividends, and buybacks. I like this one.
Okay. Liz Thomas.
Financials, I think they are ready to come back. They've had a disappointing year so far, but cyclicality will come back into the fore.
All right, Karen.
Amazon, talked about it. The stock's trading at 22 times next year's earnings, below the market. It's got a lot of growth.
Thank you. The Joe T.
Baker Hughes, crude oil above $65.
You
Watch
threatened
out.
to pick the Joe T, but you did. You did Baker Hughes.
Baker Hughes in
I'll
the
see you
Joe
at 3. Bye. All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with, well, what looked like a comeback for stocks, fading a little bit as we begin the final stretch. We'll discuss all of it, what it means for the future of this rally. We'll ask our experts, including FundStrat's Tom Lee, in just a moment. He's sitting right here ready to go. We'll get to him momentarily. They're the majors. As I said, we had a pretty good day going. As you look at the scorecard, we're trying to hold on to it, though. It was a good day across the board. Most sectors were pretty good. Energy, consumer discretionary, technology continue to lead the way. We do have a little bit of weakness developing, though. The mega cap names were all higher. Apple, though, gone negative, so that's dragging the Dow down a bit. NVIDIA's positive 1 week from today. 1 week from today. That is the earnings report that could save it all, according to at least some reports on the street. Palo Alto, not so much today. It is down near 8%, sinking on its guidance. More broadly, though, some of the software names are getting a much-needed lift, and that has helped the overall picture. Cadence is as well. Its guidance was better than feared. Stock's up 7.5%. All of that takes us to our talk of the tape, the resumption of risk on and whether, in fact, it can last. Let's welcome in Tom Lee. He is FundStrat's head of research. As I said, right there at Post 9. It's good to see you.
Great to see you, Scott.
So you think we're going to 7,300 on the S&P in the near term?
Yeah.
So are we witnessing this slow turnaround for stocks to get back on track? What do you think?
Yeah, I think stocks took some hits. Partly was a software downturn, and then this rotation out of the Mag 7 armies into the bullet makers for AI. Mm-hmm. And a general sort of risk-off as gold surged. But, the earnings have been delivered solidly. We've been getting good economic reports. And I think positioning has gotten risk-off enough that we can sort of climb maybe in a labored way towards 7,300.
Hey, how about that? Do you think, we talked about this at halftime today, are we appreciating enough how strong earnings season has been?
I think the stocks haven't reflected that because we've had a huge beat, a large percentage of companies beating. It has shown up, I guess, in small caps, but to me...
Yeah, but I mean, you know what I mean? It's like, if you said we were going to do double-digit earnings growth, and that would be a key pillar of the narrative as to why stocks were going to continue to go higher, and then we had all this volatile chop, and, we're not sure now where we're going... You just said, well, if we're going to do that kind of earnings growth, we're going to be just fine.
Yeah. I mean, there's this old adage that it takes a whole lot of E to offset PE, meaning like, you're right, the earnings have been good, but things that have affected multiples are what's causing the market to come in. You know, the AI, a new Fed chair, potential war. So you're right. I think the fundamental anchoring is actually good. So that means stocks eventually kind of re-anchor to that and we go higher.
So you say there are three key trades: rotation back to the Mag 7, the IGV bottoms, that's software, and crypto bottoms. But you're not suggesting that those three items have happened, are you?
Not yet, but we're maybe 90% of the way through that, because I've seen some of the positioning data. So we know on the, like for instance, prime brokerage, Goldman data, software ownership is like multi-decade lows. And then we know that the Mag 7 have gotten cheaper than the bullet makers, which has never happened in 10 years. They're 3 PE points discount. And then of course on the crypto side, we've already gotten to drawdowns that are basically 80% of what's been in past crypto winters. So I think those are setting up to be really big trades. Maybe they've led the market, so they bottom first and they'll start to rally even if the market's peaking.
Does NVIDIA earnings 1 week from today hold the key to the whole thing, just given the fears about AI and the spend? And we need to get the results. We need to hear from Jensen Huang.
I mean, that could set the bottom because, you know, like if you look at the software index, this is like the 8th week of a pretty severe downturn. So next week, you know, as you know, sometimes 9 is a big number, turning point. That could mark the bottom for software.
All right, well, we'll have to wait. Bear with me a minute because I did mention at the top of the show today, discretionary names are strong. And one top technician says there are multiple breakouts underway, and that's hard to be negative against. Jonathan Krinsky, he joins us now at BTIG. You know, I saw your note earlier, and I wasn't sure we focused enough on these stories where you suggest restaurants continue to work higher, casinos are breaking a downtrend, airlines are taking flight, and all of those are bullish signals.
Hey, Scott. Yeah, I think, you know, when you have the narrative, I think the narrative of the consumer is much weaker than what the consumer stocks are reflecting. And, you know, it's definitely important to look at consumer discretionary. I think it's important to look at every sector on an equal weight basis over time, but discretionary in particular, given, you know, the dominance of a few big names like Amazon. So on an equal weight basis, discretionary has been consolidating for about 6 months, does look poised to, you know, keeps pushing up against that resistance, looks poised to break through it. And then, yeah, when you look below the surface, restaurants, you know, they were in a severe bear market for a couple of years. We think they bottomed, I think late last year. They've kind of turned the corner. Airlines as a whole and the two majors, Delta and United, are above their pre-COVID resistance highs. So there's just a lot of good things working under the surface in consumer land. And again, I think what's been lost on the market as this, you know, software downturn and mega cap tech downturn has been happening is, you know, some of the rotation and some of the beneficiaries of that.
Can that be enough, the strength in these different consumer markets, to offset any sort of continued weakness within tech?
I think, you know, if the tech week, if Tom's right and software is near the bottom, and we do think we saw some capitulation in the last 2 weeks in software. So if that's kind of the general area of software, and then the key though is really semiconductors. And to your point, NVIDIA next week is huge. The reaction to that will be huge because semiconductors are the largest industry group in the S&P 500 at 15%. So I think when you add it all up, if software is putting in a bottom and semiconductors don't need to, you know, continue to go higher, they just can't falter too much. So if those two things are the case, then I think there is enough strength below the surface to get that, you know, S&P finally through 7,000. But you need software to hold up, and you need semis to, you know, to not give back a ton here.
What do you think about his 7,300, you know, near-term call?
Look, I mean, we've been in a trading range from 6,800 to 7,000. So a breakup from 7,000 would, in the near term, target 7,200. So I don't think 7,300 is out of the question. Again, if you get, you know, Mag 7 kind of resuming its uptrend, and if you get a bit of a bounce from software, I think that's definitely possible.
All right, interesting note, and I appreciate your commentary around it. That's Jonathan Krinsky, BTIG, joining us. Real quick from you, I mean, what do you make of that? These points that he makes about these different areas of discretionary making a pretty good signal.
Yeah, and discretionary bottoming kind of does make sense because consumer confidence is so low. And as you know, it's a contrarian indicator for confidence to be that bad. So discretionary should start working. But then you do start to get more things working, and it could help push the index higher.
All right, well, let's welcome in our panel to continue the conversation. CNBC contributor Hightower Stephanie Link, New Edge Wealth's Cameron Dawson, Tom Lee, of course, as you see on your picture, is still with us. How about that, Steph? You continue to talk about the consumer, and now Jonathan Krinsky has some really good data, at least technical factors within the market, to suggest that we're about to see a pickup in a lot of areas.
Well, the consumer is extremely important to the economy. It's about 70% of GDP, and services piece, which has held up remarkably well, is 75% of consumption. So that's what we root for. And I always watch the labor market, and the labor market has cooled down, but it's still pretty good. There's one job available per one unemployed person in the country. That's not so bad. And weekly jobless claims on a 4-week average is about 227,000, so still pretty low. Of course, wages are still around 3-4%. Inflation has come down, but I think the real reason that the consumer is doing better, discretionary as a whole, is because interest rates are coming down. Look at the 10-year. It peaked last year at the 10-year at 4.6%. You're at 4.8% right now. Look at the 30-year mortgage rate. It peaked a year and a half ago, closer to 8, and it is now 6.17. It's the best number since 2022, and that is leading to a broadening out within discretionary to include not only services, but the home builders. Anything tied to housing has done really well. And then, of course, there are other special situations. Jonathan mentioned restaurants. I like Starbucks. McDonald's acts really well. Estee Lauder has made a major comeback from its 30% drop earlier this month. And then you can pick and choose a lot of different names. And I think that that's very, very healthy. And I also believe that while NVIDIA is important next week, if NVIDIA is good enough, Scott, it will drag through the pipeline better results for, the power and the grid and the data center companies, and that is really healthy. And at the same time, if you can see the software sector stabilize and see this broadening out continue, I think it's pretty healthy for the overall market.
Yet, Cameron, the market feels a little dicey, doesn't it?
Yeah, well, not to rain on the consumer parade, but if there's one thing to push back on this optimism about consumer growth, is that if you look at the equal weight consumer discretionary, which, yes, it's about to break out on an absolute basis, but if you put it next to the consumer staples, you actually see that it's really underperformed to start the year. And this has been the most important ratio, we think, for the bull market over the course of the last 3 years. The fact that discretionary has outperformed staples means that every time you've had a headline about bad consumer sentiment, the equity market was arguing that you should give the consumer the benefit of the doubt. So this ratio is still in an uptrend, but if it starts to bleed lower, making lower highs and lower lows, then that's when we would grow more cautious about the consumer. We'd grow more cautious about the U.S. economy, U.S. risk assets. That's not the call we're making, but given the underperformance to start the year, it's certainly a yellow flag to watch.
Tom, what do you think about that?
Well, I mean, to me, I think Cameron's not really raining on a parade because consumer staples is a defensive trade, and it kind of makes sense. Gold rising and tech not doing well, and I think a lot of de-risking in portfolios. So I think that's why staples and healthcare and defensives have been working. But
why is that all happening against a backdrop, as you heard Stephanie Link articulate, has so many different reasons to be positive about this market? So why are staples outperforming, at a time when, if you believe what Steph is saying, that they shouldn't be outperforming discretionary names?
I mean, I think a simple explanation is, we had 3 years of big gains for the market, and now markets are testing whether we can do a fourth year, so they want to catch their breath. That's almost also why energy materials, I think, have done so well this year, because when we looked at the end of last year, they underperformed so much over the past 5 years that they almost always snap back, and that's why it was a top sector pick. I think this is a lot of mean reversion, and then when the dust settles, the bull market resumes. But I think it is a bit of congestion.
Cameron, you want to address NVIDIA 1 week from today and what you think is really hanging on that report? If anything, maybe we're making too much of it, but given the recent upset around AI and the whole narrative being questioned and the spending, et cetera, feels like an especially important time to hear from this company, if nothing else.
It is important for the AI infrastructure trade, and that's really important to differentiate infrastructure versus the application. So the infrastructure side of things has been very good for a lot of different portions of the market: power generation, industrials doing better, semiconductors, of course, but the application of the AI is what certainly has dinged the software names. So I don't know if a good result from NVIDIA could help lift and boost the software names. It really will come to the first quarter earnings season for those names to come out and say, look, we're not seeing AI eat our lunch. And if they do say that, of course, you could see further downside. So for that bullishness on AI infrastructure to continue, NVIDIA certainly has to blow it out of the water.
And Steph, we just don't seem to have that much conviction behind the mega cap trade. What looked really good earlier today, a focal point of how we were going to open our show today, now kind of is ho-hum. I mean, okay, NVIDIA is still positive, and Microsoft is as well, and Amazon is too. But now Meta's gone negative, Alphabet's gone negative, Apple's gone negative.
They're really over-owned, Scott, and there's no question about that. Like 75% of institutions own all of these names. So who is your incremental buyer, and why would they do it right now? I think you can pick and choose a couple. You know I'm behind Meta. You know I'm a smaller owner of an Amazon. But for the most part, I mean, I'm not sure what the catalyst is, because you talked about it all last week. We've talked about it. The free cash flow story has totally evaporated at some of the companies, not all of the companies. Certainly not Apple, certainly not Microsoft, but they're all getting clustered into one. And I think that there's just so many other places that people have been taking their profits and going elsewhere, because you are seeing better results in terms of earnings. And it's across the spectrum. It's been a very broad-based earnings recovery, and I think the ones that have lagged for the last 3 years to the Mag 7 are now starting to get their day, as they should, especially because the economy is hanging in at 3.5–4% growth.
Guys, we'll leave it there. Appreciate it. Steph, thank you. Cam as well. Tom, we'll see you back here.
Thank you.
At the Post.
Hello, everybody. Welcome to Blue Cloud Trading. If you've just stumbled upon this channel for the first time, my name is George. In this video, what I like to do is go over the stocks and ETFs that were discussed on today's episodes of the Halftime Report and Closing Bell. So we had Tom Lee in Closing Bell in the last segment there. And we're going to take a look at the stocks that they talked about on the Halftime Report as well. What time is it right now? You probably are wondering. It is 3:44 p.m. as I'm recording this video. So you're probably going to get a little bit later. But as you can see, the market's about to close. The Dow is up 0.22%. NASDAQ is up 0.74 at this time. S&P 500 is up 0.48. And the Russell 2000 is up 0.27%. You can see what happened here in this morning. We had a nice little pop. Things were looking very bright. And then, as you can see, we stabilized, and then we started dropping. Right now, we're recovering towards the end of the day a little bit. So we're staying above this dotted red line here is yesterday's closing price. And we are staying above it, hence why the indices are all up right now. Let me talk about what stocks we're going to cover and index ETFs like the FEZ, Euro stocks. We're going to look at the SPY, the QQQ, the Dow, the Russell 2000, the VIX. We will take a look at the Mag 7s like Apple, Google, Meta, Microsoft. We're going to look at all those charts. And guess what? I know it sounds crazy, but we're going to actually run over 30 different stocks. I've actually highlighted the strongest ones at the top here. 30 stocks that they talked about on both shows. That's a lot. The good news is it won't take that long. Okay. Today I'm not going to do any member requests. I'm just going to cover all these stocks, as we do have quite a few. So let's go ahead. And first, before we get into these stocks, let's take a look at the heat map. One of the things I like to take a look at every day to help give me sort of a big picture about how the S&P 500 is performing. We can quickly and easily see that. For example, utilities are down today. They're all mostly in the red. Real estate's also down a little bit today. The consumer defensives are down. And today, the technology stocks are doing quite well. Amazon was up 2%. The financial stocks did well today. Berkshire's down 0.9. Healthcare stocks mixed, and the energy stocks are looking pretty good here. And so is basic materials. So that's the one-day performance. Let's take a look also at themes. Now, this is a really new feature of FinViz Elite, the software that I'm using here. There will be a link down below in the description segment. Please use that link. It does help the channel if you're interested in checking out this software. Okay, it's very useful. There's a lot of things that you can do with it. You can get the news, for example, okay, from different news sources. In fact, it actually, you can see how it actually sets it up there. You can actually, let's say that I wanted to click on source. I can select Bloomberg, Wall Street Journal, Market Watch, CNBC, Reuters, Fox Business. Look at this. This is great, right? And blogs too, which is kind of cool. There's a lot going on this channel. And then there's also the screener, so you can screen through stocks. You've got, if you want to look at charts, specific charts, you can use this Ichimoku indicator. I was looking at the SQQQ not long ago, but let's just throw in the SPY for a moment, and yeah, you can kind of get a quick little glimpse here of what that looks like. So this is another software platform that I like to use in addition to TC2000, which is how I basically review the majority of the stocks. And I have my own personal private scanners here as well. And I share a lot of that with members. So consider becoming a member. You can easily do that by basically visiting my YouTube channel here, Blue Cloud Trading, selecting join. Okay, and then here are the 3 different levels where you'll get access to the membership videos that I do. Okay, member only videos. So I go over my entire portfolio plus 27 new stock ideas in the last video that I just did this weekend. So check that out. If you're interested, you do need to become a Blue Cloud Trader or Blue Cloud Legend level member. All right, let's get into these. Whoops, let's go back. Sorry. We have to take a look at those themes very quickly. All right, so let's go to home, go to maps, and then from here we go right there to the themes. And so from here we can see very quickly the fintech, some of the fintech stocks that were in the green here: payments, neobanks, lending, from healthcare and biotech, genomics, diagnostics, devices, IT and data. Some of the stocks there with percentages, therapeutics, right? Um, Under space tech, we got launch, logistics, all right, and launch services. Some of the stocks in there. Here's some data analytics, defense, and cybersecurity infrastructure, up 3.47% as a theme, right? And some of the stocks that are within that group. The biometrics did well, social media stocks, obviously, today, and defense and aerospace, like drones, of course, all that stuff going on. Okay, so let's get into the stocks. I just want to show you guys that very quickly. Let's look at the indices first. And there's currently just one of these index ETFs here. Like, well, this is not really an index ETF, but it's a representation of 50 of some of the top stocks within Europe, FEZ. And we are using, let me show you the weekly chart. Let's get rid of these lines just for a moment so I can show you what we're using. We're using the Ichimoku indicator, okay, or Ichimoku Cloud, if you were like searching for it under the different indicators within TC2000. So why is this helpful? And it might look a little bit intimidating at first because there are so many lines here. But what we're looking for, what this does, it's a comprehensive indicator that just at a glance, which is what Ichimoku stands for, at a glance, we can quickly assess the strength of the trend of these stocks and ETFs, whatever we end up looking, whether it's currencies, stocks, ETFs, it doesn't really matter. What we're looking for is for price. These Japanese candlesticks, you can see here, FEZ price is 68.24 per share. We want that candle to be above the green line, the red line, this light blue line, and the purple line. What are they? This is the midpoint. This is called Tenkan-sen, the midpoint of the last 9 periods. This is called Kijun-sen, the midpoint of the last 26 periods. Okay, plotted right there. You've got Senkou Span A. That's the midpoint of these 2 moving averages projected 26 periods into the future. And that's how that's plotted right there. And then Senkou Span B, the purple line, is the midpoint of the last 52 periods projected into the future, 26 periods into the future. Instead of under or above the candle, it's out there, okay? And so that helps us to identify the strength of the trend. The thicker the cloud, the stronger the trend. And then one final line with Ichimoku is the Chiku span, or the lagging line. And that's the current price, and it's projected 26 periods into the past. And we want to see where that white line is in relation to the candle 26 periods ago. If it's above it, like it is right here, that's very bullish. In addition to this indicator, I use one secondary indicator called the directional movement index that you see down here. What we're looking for here is the green line, which is the positive DI9, to be above the red line, the negative DI9. If we have that, that's a bullish trend. Okay, you can see right here where it crossed above. If we go straight up, where it was moving sideways, it started to move up. So that's what we want. We want the ADX, that's the white line there, to be moving up as well. That represents momentum increasing. When it's dropping, like it is here, notice how price was just moving sideways. Okay. The second it starts to move up a little bit, like it did right there, things started to get more bullish. So by utilizing both indicators, we're getting a much better, more comprehensive sort of backup indicator that helps to confirm some of the moves that are happening. And some people, they like to buy stocks as they're dropping. That's not my strategy. I'm more of a breakout trader. I'm looking for stocks that are actually improving, that are moving up, that are in demand, that look like they have a lot more potential for an up move. And so if they basically fit all the criteria here that we're talking about on both the weekly chart and the daily chart, like as you can see here, this is also the daily chart for FEZ. Both of these charts look very bullish. So when we get the bullishness, they get a blue flag. Now the SPY, the Qs, the Dow, the Russell, they do not have that blue flag, and I'll explain why. So let's look at, and, and by the way, so the FEZ right now looks quite bullish. It has been kind of consolidating just a little bit here in this little box, but it's holding up quite well. I like the fact that the ADX is starting to move up slightly. Let's look at the SPY. SPY has been consolidating for a very long time. We've been talking about this for a while now. These are weekly. We're looking at a weekly chart here. So look at this, right? And this is what Tom Lee was talking about, is that once we get some more positive information about, like, about what's gonna, once we come out of this little stalemate situation, that's when we'll see an expansion to the upside. But right now, things are just, we're taking a breather in the markets. And so I think because we've had this big move in all the indices, the SPY, the Qs, the Dow, the Russell, right now, we're just, taking a breather, and we're going to see how the earnings come out with NVIDIA and stuff next week. And that might help to trigger things to the upside. So SPY, let's throw on some trend lines too. This 697.84 level, it's based on that prior high right there. That's from the week ending January 30th. And so, yeah, we're approximately, currently we're under that. We're about 1.56% below that high for the SPY. And here's the daily chart. As you can see, we get the Tengensen, the green line is under the red line, so that's bearish. And remember, I said that we need all the elements of Ichimoku to be bullish in order for the ETF or stock to get a blue flag. So you can see the Chiku span here is underpriced, so that's bearish technically. We are above the cloud, so there's a lot of mixed signals here, obviously, and that's because we're just crisscrossing here. Notice the cloud too. This is some significance here. The fact that it's this flat and it's just moving sideways, and it's this thin, it just tells me that there's no true direction here. All right. The QQQ ETF has turned bearish on the daily chart. Take a look. Let's take a close look at this. Notice the single span A is under the single span B. That's when you have a crossover, and that's now a bearish cloud where this was a bullish one. Okay. And it might be short-lived, right? Obviously, but we're getting some other things happening here that also don't look particularly great, and that is the Chiku span is underpriced. Price is actually under the cloud, so that's very bearish. The red line here is above the green line, and it has been since this point right here. If you go straight up, you can see how it led to this decline. So there is something to be said about these indicators and how they can help assess what is truly happening at this particular moment. It can't predict what's going to happen in the future, obviously, but at least you'll get a better sense of whether or not you feel confident about jumping into something. And I certainly wouldn't at this point. I want to see some strength coming into this. And this is just 2 days here where we're actually moving up in the Qs. It's only up 0.81% today. Here's the Dow, the DIA ETF on the daily chart. Okay, it is just barely, it looks like it just made it. Let's see, 497.30. Yeah, it just did. So let's look at the weekly. The weekly is very bullish still. Okay, but stalling around around these levels here. You can see that we did have a high on February 13th. We're still under that on the daily chart. We just got back above it. So I'm going to give it a blue flag. When I checked this out earlier, it was not there yet. So we'll go ahead and give that a blue flag. Russell 2000 has a negative crossover. It's when, again, the faster moving average, the green line, crosses under the red. That's bearish. Everything else looks okay on the daily chart with the Russell, okay, except for the fact that we're obviously under some levels. Let's look at that weekly chart. So you can see here that we're just consolidating for, what is this now, 6 weeks in a row? That's quite a long time if you think about it. Russell's been stagnant, okay? So it's a very, very tight area here. We got to see some more positive earnings, and maybe that will trigger pop. But this is more a time to just kind of sit on your hands and just wait it out, in my opinion. Here's the VIX dropping down 3.6%. That's a positive for the market. That's the volatility index. And so we're at a level of 19.56%. I'm sorry, 19.56. So that's pretty good. What else? Let's talk about the Mag 7 stocks. We've got Apple here. So on the weekly chart, Apple has kind of started to turn bullish, actually, because we had that pullback. We have price above the Tengen and then Kijinsen. Okay. So on the weekly chart, it's looking good. It's looking good. In fact, what's forming currently right now is a bullish harami. You see this double candle pattern? That's actually quite bullish. Let's look at the daily. Well, actually, let me do this. Let me show you what that pattern looks like on our candle pattern reference sheet. It is right here, right there. Okay, large red candle followed by a smaller bullish candle. Harami in Japanese stands for pregnant. So you get the larger body and small body. And so that is positive. It's bullish. The alternative, the opposite of that is the bearish engulfing, where you have a small bullish body followed by the larger one. And if you guys want to get access to this candle pattern reference sheet to help you understand candles and some of the candlestick patterns that you're seeing here, in addition to that, there's also this other patterns cheat sheet right here for the different patterns, like you might have heard of head and shoulders pattern, inverse head and shoulders pattern, cup and handles. This can help you guys identify a little bit easier on charts these bullish and bearish different patterns. If you want to get access to that, just come to my X page, x.com, at Blue Cloud Trader, formerly known as Twitter, as I'm sure you all know. So yeah, and you can find it once you're on my homepage here, the Blue Cloud Trading homepage on X. Scroll down and select highlights, this tab, and then scroll down, and that's where you'll find it. Okay. All right. So let's get back. Let's get back. So Apple looking good on the weekly. However, daily chart, not so much, right? So we don't have confirmation on the daily. And that's a problem for me, at least. I'm looking for stocks that are bullish on both time frames, weekly and daily. You have a higher probability trade in that scenario. Um, right now, Apple, it has got, as you can see here, it reached above the cloud, and then now we're currently under, and we've got resistance. We've got that green line, the Tenkan, the cloud is waiting right there. And it might turn bullish soon, and price might break through, but it hasn't happened yet. The red line is still above the green line, as you can see right here, down below for the directional movement index. So I'd hold off personally. you start looking at a shorter time frame, like a 2-hour time frame. Even the 2-hour time frame is not looking particularly great here. There's a 2-hour, 200-day moving average, that dotted yellow line. Notice how it's stalling right there, and the Kijun-sen is right there. But if you go even shorter, like maybe I don't know, 30-minute chart, same thing. So Apple at this time, I would not be jumping into, obviously. What about Google? Google's been pulling back for a little while. You can see that multiple days now. It's stalling at the bottom of the cloud, which is good. It's a bullish situation. And I mentioned this yesterday, actually, in yesterday's video. I said, guys, we have a bullish pattern here. We have a bullish spinning top. And when we see that specific type of candle after a pullback, there's a higher likelihood, no guarantees, of course, that we're going to see a potential bounce. Now, it's moved up a little bit. It's only up 0.43%, but we're still under these moving averages and the top of the cloud. The ADX is still moving straight up, and the red line is above the green line. So I'm not particularly bullish here, but I like the potential. That's all that is really. And here's the weekly chart pulling back. Okay, still under the moving average here, the Tenkan-sen. So here's Meta. Meta's inside the cloud on the weekly, and on the daily chart, we're under. And that too, I said we have a doji, that's a bullish pattern. Again, let me just show you these bullish patterns. So there's the bullish spinning top. So if you see that after a pullback, that's bullish. And then the doji, it says neutral, but it's actually, if you see something like that right there happening after a pullback, that's very bullish. Okay. So let's get back. So, we'll see. We'll see what happens here. How about Microsoft? Microsoft is still um, in a very bearish environment here, up 0.69%. Is it potentially creating a double bottom? Maybe right here. It's possible. We did move up slightly, 0.69%. So, but again, we're in bearish territory with Microsoft on the daily chart. Here's Netflix, also still declining. It's been up 3 days in a row. Look at that bullish harami that turned into something, right? Again, this could be a short-lived little move up. That's the bullish harami right there again. It's moving up slightly day after day, but we're still under these very important resistance levels. And every time price has come to it in the past, notice how it stalled and pull back. So it's a very effective moving average. In fact, I like these moving averages so much more than I do traditional, moving averages like the 20-day simple moving average or the 50-day, which are very popular. I found these to be significantly more effective. And I think it's mainly because it's taking the high, the low of the candle, dividing that by two, and giving us a midpoint. So one of the things you'll notice with these moving averages is that they flatten out. See that? Look at that. It just will go sideways. And when it does do that, it actually becomes stronger level of resistance, actually. Okay. So it is interesting that how price has been hugging the Tenkinson, the 9 period there. Like look at that. It's crazy. All right, let's keep going. Even over here, look at this. When it reached up and touched the Kijunsen and then drew, came back. Over here, same thing, pull back. And all of this started happening once we got under the cloud. So nothing positive happens when you're under the cloud. That's why it's not a good idea to be thinking about adding positions. We're talking about a drop now since it got under this cloud here for Netflix of 31.99%, folks. That happens here on this specific date, October 22nd, 2025. So imagine having a position that just keeps on dropping, dropping, dropping. And it's also broken through this 82.11 level, this prior low from April 7th of 2025. And then we have this low over here. So that's a significant one from January 15th of 2025. So we're under those levels. Notice what happened over here, how price kind of was hugging that, trying to make a little bit of a break, and then boom, it drops some more. So I'm still not positive on this bullish on Netflix. Whoops. Nvidia. What about Nvidia? It's still consolidating until its earnings next week, February 25th. That's the date. So we'll see what happens with Nvidia. That's the daily. There's the weekly chart. All right. Here's Tesla. It's pulled back on the weekly chart. It's basically hanging by a thread on the Kijinsen right there. And on the daily chart, it's under the cloud. So again, everything started to drop, started to go negative. Once price got under the green line, the Tenkin's in there, it's dropped about 13.6%. Alternative, you go back in time and you want to, back test this indicator, you can do that. You can go back over here, for example, where price got above the cloud. After it was inside the cloud, got above it right here. That was on August 8th, 2025. And I mean, let's hypothesize that we were going to add here and get out once it entered the cloud. That would have been a 28.3% return in 3 months. Okay. So, all right, let's talk about the stocks they brought up on the show. I've got the strongest ones highlighted at the top with the blue flag. So let's look at those first. Amgen, okay, in the healthcare sector, drug manufacturers looking very bullish today. Here's the daily chart for the last 3 days, actually. It's up 1.71%. If we look at the weekly chart, that also looks very bullish, which is why it gets that blue flag. BKR looks great. Baker Hughes Company, bullish cloud. Price has been moving up steadily. Daily chart, same thing. Looks nice. I like it. CVX, I like this one too. Chevron Corporation looks good on the daily, looks good on the weekly. I don't like that reversal candle, but it is still forming. So I wouldn't put too much emphasis on this yet. RSP on the weekly chart looks good. That's the Invesco S&P 500 equal weight ETF. And on the daily chart, it also looks good. So if you're looking for an index to hold during this time, the equal weight is actually much better than the S&P 500, the SPY. Again, look at the SPY versus that. Okay. RSP is significantly more bullish, in my opinion. And RSPD, which is the Invesco S&P 500 equal weight consumer discretionary ETF, another one of the ETFs they discussed in the show. That one also looks good today. It actually got back above the Tenkinsen here today, up 0.91%. Here's the weekly chart. All right. And by the way, since we've been chatting, okay, the market has closed now. So let's take a look and just give you guys a brief review of that. What's happened here? So the Dow actually closed up 0.26, Nasdaq up 0.78, S&P 500 up 0.56, and the Russell up 0.38%. So that's good. Okay, Nasdaq leads as Nvidia-driven AI tech rebounds sparks semiconductor rally while Fed minutes and resilient data keep rate cut bets steady. All right, let's go to the SOX, SOXX, which is another ETF, iShares Semiconductor Sector Index Fund. That one looks pretty good on the daily chart, okay, and on the weekly. So I do like that one. UAL I like. That's the United Airlines Holdings, Inc. The airline stocks have been looking more bullish. Here's the weekly chart, and here's the daily. We got the bullish cloud price. It's technically, let's look at that Chiku span. I mean, the Chiku span is just right on the cusp there. I would give this a pass, basically. I can see the green line just recently crossed above the red line there. The volume increase today. Uh, it moved up 2.55%, and the next earnings are on July 15th. Alta, Beauty, Inc., consumer cyclical sector, specialty retail, down 2.46%, and yet it still gets a blue flag because it's holding above that Tenkinsen and Kijinsen cloud. Chiku span is above price on the daily and on the weekly, same thing. All right. Overall, looks bullish. XHB home builders on the weekly chart, we are above the cloud. Everything looks bullish still, even though we're down 0.46% today. Here's the daily chart. It's pulled back a little. It is more likely now that tomorrow, if we have a bullish day, that it's going to bounce right there. Okay, so the rest of these folks, that's basically what, 9 out of 30? 9 out of 30, less than 1/3 of the stocks actually meet the criteria for bullishness with the Ichimoku indicator. Everything else is something off, like ABBV, for example. Let's see, the daily chart actually looks okay. We've got a future cloud that's turned bullish. Price still is above the cloud. We've got Tenkinsen above Kijinsen. Chiku span is above the cloud itself, too. If we look at the weekly chart, we got Tenkinsen crossed under the red line. So that's some bearishness there. We've got resistance levels at 239.29. We're down 1.8% today. What about AWK? That's under the cloud, under the 200-day on the weekly. I'm sorry, 200-week moving average. And on the daily chart, we are also under the 200-day moving average. That's that dotted yellow line. You'll notice here that we never closed above the cloud here. Yesterday, American Waterworks came up and then dropped today. So regulated water, yeah, it's not looking particularly great yet. Okay, so I'd hold off on that one. American Express was another one they talked about. This has been in a downtrend. A downtrend is basically you can identify it very easily by looking at, okay, here we have a double top pattern. So when price reaches this level, then pulls back, it comes back. You might even call this a triple top, actually. If you think about it, comes down. Okay, there's a second move up. There's a third one. So that's a triple top. And once we get under this low, problems happened. Okay, because we created a lower low here. And so it drops some more, drops some more. And now we have a lower high. Okay, another lower low from the prior one. We're close to the 200. Things look a little more bullish here, but I wouldn't be, interested in this one. So we can see that triple uh, top pattern on that sheet, the other one, not this one. Let's go to the next one here. Click on that. And there it is right here, triple top pattern. Price moves up, comes to this level here, drops, comes back to that same level, drops, comes back to that same level, and drops, and then breaks under the low, and there's trouble. This is the bullish variant, a triple bottom right here. 1, 2, 3. And I'm sure you've heard of double bottoms and double tops too. And here are some of the other patterns too, like ascending triangle, descending triangle. All right, let's keep going. So no on AXP, CBRE is showing a little bit bullishness today, up 7.63%, but it's still under the cloud. And look where it found resistance, right at that 200-day. Okay, so in my opinion, we're not out of the woods yet with this one. Look at the cloud. It dropped significantly with that big drop, and you can't even see the cloud because the Senko Span A and Senko Span B are at the exact same level. Isn't that interesting? So, yeah, not looking great. The Chico Span is moving up, just like price, obviously, because that is the current price in a line form, but it's under the candle 26 periods ago. So no on CBRE. CDNS is under the cloud. Cadence Design Systems, lower highs, lower lows. No on that one. Yeah, I don't know. Maybe we could potentially say that this is actually hold on. We pulled back, we came up, we pulled back again. You could argue that that's a higher low right there from the prior one because of this candle moving up today. And you could also argue that we have a higher high right now. Do you see that for CDNS? The only problem is we're still under the 200. We're still under the cloud. So we've got resistance right above us. We're not, and it's not that far. It's only approximately 4% away. You got Costco. That one today closed under the 9 period, down 1.58%. That's the daily chart, and here's the weekly. Okay, the weekly is not bullish yet. We have a bearish cloud still. CRWD on the weekly is inside the cloud. On the daily chart, it's under. So no on CrowdStrike Holdings. Right, let's keep going. EATZ is the Advisor Shares Restaurant ETF. That's under the 200 on the daily chart and under the moving averages. So no on that. EL, Estee Lauder. Tenkinson is under Kijinson. So, and the cloud is still bearish. So no on that one, even though price is above the cloud. GLD, gold, still inside this ascending triangle pattern. It did move up 2.25%. But it's still stagnant in here. And as I said, it's looking like more of a bullish pattern. This ascending triangle is actually a bullish pattern if we can break up above the high of the actual line itself. Personally, I'd be looking at that 470.06. It's based on the high right there. Let's go to the next one. IBIT Bitcoin is still kind of consolidating, and it's under the cloud now for quite a while. You can see that long trend line that was broken. If we go to the weekly chart, right there, And so it's been in a decline. Technicals matter. And so, buying into weakness, you're taking a gamble, and you're also putting your money in something that's declining. It just does, for me personally, it just doesn't make sense. I want to wait for at least a little bit of bullishness. I mean, minimum, you'd want to wait for the daily chart to start showing some bullishness, maybe even the 2 hour. I mean, look at this. This is a 2 hour time frame of Bitcoin. It looks like it's stabilizing here, which is good, but it still has a lot of work to do. IGV on the 2 hours under the cloud. Here it is on the weekly. Okay, finding some support at the 200. Here it is on the daily. Not looking great. Jets. Okay, that one does look very bullish here. Let me just double check this one. I think I forgot to put the little flag on that one. Jets. So the US Global Jets ETF. This one looks good on the weekly, and it does look good on the daily. When I reviewed it earlier, maybe it was still under the green line there, the tangent, but right now it got back above it. So I do like it. So we'll give it a flag. Bada bing. Just like that. All right. Where were we? It was IGV. Okay, let's look at Palo Alto Networks. That's also, it dropped 6.82%. Yeah, no thanks. Under the cloud for a while now. Got under the moving averages back here on November 12th of 2025, and since then it's dropped 27.8%. Silver. Okay, now silver, it's the opposite of gold. We have a descending triangle, which is a bearish pattern, guys. Bearish pattern. I'll show you those. So here is this is what the gold looked like. This was the pattern that we had with gold, and you can see here that's the bullish variant of, okay, ascending triangle. What we've got here with silver is the bearish descending triangle. It's when it's flat on the bottom, and then you've got this decline on the top, so lower high. Okay, here we have higher lows on the bottom part. So I would be more cautious with silver than gold, obviously. So I think that again, this can certainly, it was up 5.6%. Can it break through to the top? Of course, there's no guarantees, right? But look at the directional movement index too. Red line is still above the green line, and the ADX is dropping. There's nothing happening here yet. Be careful. That's all I'm saying. SMH is still under the 420.60. Okay. That's semiconductor ETF. I think we're waiting for, obviously, for NVIDIA to come out with its earnings, and then we'll have a better assessment of the semiconductor space. SPGI is under the moving averages in the cloud. That's S&P Global Inc. No on that one. A big no. XLF financials. No on financials on this particular ETF, at least. It's only 3 days moving up. Look where it's stalling. Higher probability to pull back tomorrow, obviously. XLK, we've got a higher low, and if we can continue breaking, if we can break through these levels of resistance, maybe, um, but right now, if you look at this weekly chart, you see that that's a symmetrical triangle. That's when price gets under the symmetrical triangle, that's bearish, and it's been just declining. We're up 1.03%. I don't know how long this decline is going to last. Again, I think next week we'll have more answers. XLP, consumer staples, dropped a little bit, 0.18%. Here's a weekly chart. This one has been the reason why they're trying to, on the shows they were talking about, like, why are specific sectors moving up while others are moving down, and like, why is technology moving down so much? It's because it had moved up so much over time. You look at XLK again. Let's take a look at XLK one more time. Hold on. Right? It had moved up quite a bit. And so now, a lot of times what will happen is profit taking starts to take place. And maybe, they're waiting to see, will the technology's earnings announcements be positive? If they are, we'll see it continuation of the upside. If not, and Wall Street doesn't like the information, we're going to see everything drop. So that's the weekly chart on XLK, and this is the weekly chart on XLP. Notice how XLP for the longest time has been stagnant here. right? We're talking about since August 9th, 2024. Okay, so for the last few years now, it hasn't participated in the move. Now, these last 3 weeks, it all started on February 6th, 2026. We had this big move. Look at the volume. Look at the amount of trades taking place down below here. Look at the ADX moving up. Okay, right there. Beautiful. So that looks good. And here's a daily chart. Now today it dropped 0.18% and it closed under the Tengensen. I don't know if that's going to be conclusive yet because it is staying above that low of that candle. We'll see what happens tomorrow. XLY, consumer discretionary. They were talking about consumer discretionary. That doesn't look particularly great either. If you look at XLY, red line is above the green line. It's been in a series of lower highs and lower lows. We're in a downward channel. We're under the cloud. At least this ETF is not something I would be considering. There's the daily chart, and here's a weekly chart. We're under the Tengensen Kijinsen. Right? It's not like it's a completely broken down ETF, but like right now, there's weakness, more weakness than there is strength. And so, yeah, guys, that's it. We went through all those stocks and we did it all in under 40 minutes, which is great because we did cover quite a few things, right? So, thanks for watching. Thanks for supporting this channel. By the way, don't forget to like and subscribe. It's free to subscribe to the channel. Does not cost you anything to subscribe. So hit that like button and subscribe. Now, the other thing is there's a new thing called hype. After you hit the like button, you can hype up to 3 times per week on any channel that you like for free. And they issue 3 new hypes every Monday, just so you know. It's like this new thing that YouTube is doing. It helps to basically push my channel out to more people. We just reached 28,000 subscribers this week, actually. So I do appreciate all of you who have subscribed up to this point. Hopefully, you guys are getting some cool information and enjoying the channel. Again, have a great one. I will catch you in the next one.